afternoon, everybody. Derrick is out, so I'll be doing the meeting this afternoon. Derrick is snowmobiling across Yellowstone. Probably having a lot of fun. Alright, let's do it. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, take the time to read this disclosure. I greatly appreciate it. And these are my current position disclosures, my current long positions as of this meeting. SoFi, yeah, quite a reversal. It took like a minute for me to see those numbers. Looks like they were okay. Zip with the buyback. Let's SoFi sees blah 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 versus. It looks like their SoFi's guidance is okay. Mixed guidance, kind of a beat, kind of a miss. Stock's reacting well though, so good for Derrick. Hopefully he can sell some. Okay, so market today. Basically, I titled today's video "Bears Take Back Control" because that's exactly what happened. So in the morning meeting, I wrote down and was saying your levels to watch on the downside 432 and then the upside 438 to 440. So what does that mean? Basically like this 438 to 440 on the daily, which futures actually hit basically 440 overnight. I think that was last night. That's your resistance. And then 432 is your support that bulls really need to hold above in order to stay looking good, in order to keep things healthy. And then in between there, it's kind of just chop. So what did the market do? Market open, chopped around a little bit. VIX is still elevated. We slowly grinded lower. Around 10:45, we tested 432 low here, 432.31. Put in a nice bounce into equilibrium, downward moving averages. We couldn't reverse that, and we broke 432. And I mean, literally, if you had a sell stop at 432, you got paid within a minute or so. Once we lost that 432, it was pretty much game over. Quickly down to 431, a little bit of chopping, and then all the way down to 428, bit of a bounce, and then just a really choppy afternoon. Flushed 428 and then bounced into the close here. And it looks like we bounced a little bit more after hours here, 430, now at 431. But overall, bulls were not supposed to lose that 432, and definitely were not supposed to close below that 432. So I would argue bears are back in control here. This daily ADMA, we managed to get 2 closes above it. This was trying to curl up. Now we're closing back below it. This is curling back down. Our 21 is still sloped down. Gonna, slowly come down towards these highs and make these highs really tough resistance once this 21 gets there. Other indices, Qs, yeah, same thing. 2 closes above. The 8 was trying to curl up. Now closed below. We did hold 340. So not the end, even held 342. So not the, and by held I mean closed above. So not the end of the world, but definitely not a great bullish looking candle there. Definitely a bearish candle. And then IWM was the worst, as banks are kind of a disaster with all the Russia headlines. So IWM lost that 202 and 200, and pretty much closing right at 200, a little below 200. But this is definitely a damaging candle for IWM. This is not a bullish resting consolidation candle. Definitely a damaging candle for the IWM. So overall, I would argue bears are back in control. the Russia headlines are obviously pretty annoying, and it's still, the Fed is the gods of the market pretty much, and don't fight the Fed. The Fed has turned hawkish and has been hawkish. So, we'll see how the Russia stuff resolves, and at this point, it's March 1st today. Here comes the March meeting, the highly anticipated rate hike that we've been, we thought never happened, but here it comes, right? It's right around the corner. So we'll see in the March meeting what they have to say. We might just have to wait for that, and we might just have to wait for a Fed pivot as well, for those guys to get more dovish. Don't fight the Fed has certainly been a very great rule on the way up, and if you've been following that same rule since they've been hawkish, it's been a great rule as well. So big picture, it's kind of hard to say with the market right now, but after today, I would say that the bears are in control. Bulls need to get back above 435 now. Before it was kind of like 440, but now I would say this 435 is pretty important. So Bulls need to get back above there. And then we'll see if bears get a day two, and SPY actually really loses his 430 tomorrow. We're looking at like 425 or so. So yeah, that's the market. That's all I really have to talk about. I mean, it was kind of just like a choppy day. I didn't trade a whole lot. Some of these material names were going crazy in the beginning of the day. So like FCX was getting swept, AA, CLF. I remember Oxy was getting swept. Oxy was super strong. Select energy names were very strong. Depends on like the sector and exactly the company. So like an Oxy was really strong, an XOM was okay, and a Halliburton was disgusting. So what did the XLE looks like? XLE was like a doji, right? Like super mixed and choppy. And oil's just absolutely blasting off. Here it is, like oil firmly above 100, not blipping above 100 and falling back below, but firmly above 100. So we'll see if oil like really puts a floor in at 100 and it starts going towards 110, 120. It's not impossible. Yeah, I think that's all I really have to talk about. Just the market, it's kind of, it's not great that the market isn't doing well, but it's at the same time kind of exciting that the market is just in play every day. Because for so long it was just, boring, bull, grindy up market. The market's not in play. Look for individual names. Individual names. But now, like, the market's in play. Everything's in play. You can be scalping SPY. You can be scalping Apple. You can be scalping AMD. Like, these names are moving throughout the day. The VIX is elevated. The VIX is above 30. Things are moving throughout the day. So, like, we were just having a talk about it today. Someone was asking me, do you think it's, like, better to trade in the middle of the day? And I was saying it's not, now that, like, things are going crazy and the morning is too crazy. And I was basically saying it's not better, but usually I would recommend to not do it at all. But now I think you can, because the VIX, like, things are going to move. When the VIX is down and things aren't moving, things just grind. And, like, when things are, I don't mean to keep saying things, sorry, stocks, are extended on like a 5 or 15 minute chart, but it's like grindy market action. You don't get that like up and down movement where you get that 30-50 cent pullback and you can cover some and you can scalp and you can trade around it. It just like goes sideways and grinds and you can't really get out of things, or you get those pullbacks. So it's not great that the market's down overall, but at the same time it is kind of exciting that pretty much every single day the market's in play. And same thing today, same thing tomorrow, the market's going to be in play tomorrow. 430 and 435 are now our important levels to watch. So we'll see how we gap. We'll see if we gap below 430. Obviously, we'll see what kind of Russia news comes out overnight. I'm sure there's going to be more of it. And we'll go from there. It's interesting times. So, yeah, I guess that's all I really have to say. So any questions, comments, concerns, complaints that anyone has, definitely feel free to share. Pat, why was 432 level on SPY, pre-market low and bounce from it? Yeah, so I mean, usually these levels that support and resistance, they're whole numbers, right? And you can usually just eyeball them on a daily chart as well as a 5-minute chart. Now, be careful. I know, like Derrick would obviously tell a new trader, don't 5-minute support and resistance isn't real support and resistance, and I completely agree with that. But what he's talking about is like one candle or one little pivot at like one pivot or something like that. Like that's not support, one pivot on one 5-minute chart one time. But like even just eyeballing this 432 held yesterday morning multiple times. When it got back below it, it struggled. Like you can see it kind of just it doesn't just smoothly go through this level. It struggles at this level. Even in days prior, where it broke it, struggled against it, and then even this pivot that I coincidentally pointed out before, but that was like the real low where we fell all the way down here, and before SPY got like a real bounce, we came down from 442 to 432. So 432 it's just like an eyeball level with multiple points of inflection. I don't even know if I probably looked at pre-market too. Yeah, I probably saw this pre-market as well. And yeah, it was just like the pre-market low too. So what was your question? Why at 432? Yeah, that's why. I could just see from prior days that it was, a valid level based on all these like inflection points. And that's not like a super clear explanation, but I hope that makes sense. And like I guess my second point to that would be 430 is obviously a level, but if SPY's at like 433, like I'm not gonna wait $3 that's a lot of room. I'd rather find a closer level to watch as well. Earnings, yeah, no problem. What you just mentioned, I've been avoiding getting involved middle of the day, but we have seen a lot of highs or lows getting taken out lately during that time. And then, yep, I guess what I'm saying is I should be more flexible. Do you think this has anything to do with the negative gamma? Yeah. I mean, it's negative gamma, elevated VIX. They kind of mean the same thing, just bigger moves. And pretty much the kind of what I just said before, like the VIX is above 30 and has been above 30 for multiple days. A VIX above 30, it's literally impossible for the market to not, be moving 1 plus 2. I don't know the exact percentage of what 30 VIX implies, but it is literally impossible for like SPY can't just have like a 0.1%, 0.2% super tight little baby, like these days from like back here. If that's going to come, then the VIX needs to crash down. It's one or the other. So because of that, things are gonna be moving throughout the day, all day. So yeah, I guess just be aware of the market environment you're in. And it's good, I guess, that newer guys are seeing this type of market because there's different types of market. There's bull markets, there's bear markets, there's sideways markets, there's news, headline markets. There's probably like a solid like 5 or 6 types of markets. I just listed like 4 of them. And we're in like a kind of like I would say a sideways / headline market right now. But so yeah, just be aware. There's things to be aware of. The VIX is always an important thing to pay attention to. Being aware that the VIX is above 30 and it's elevated, you know that it's a choppy day. And again, choppy markets, intraday, things look good and they're going to break out, they roll over. Things look like they're going to break down, they snap back up, they roll over, they snap back up. It's choppy. So, yeah, hope if that makes sense. You draw those support and resistance lines yourself. I was just like double clicking with my mouse and having crosshairs. I don't really draw lines because I'm just too lazy for it. Like back in the day, I would definitely, go la la la. This is an important level. But now I'm just kind of too lazy for that, so I just set price alerts. Yeah. Price alerts are easier. It's the same thing. Just 430 is a level. Set price alerts above or below 430. AMC. I don't think I saw the AMC numbers. AMC. This is doing like no, people don't care about AMC anymore. This is doing like no volume at all. SoFi, however, yeah, good for Derrick. He complains. He's always like, "Oh, my earnings never work for me. They never work. If I'm holding a stock in earnings, it never works." But this one's working, so he's got one at least. JWN, I saw. Yeah, they crushed it. It looked like they crushed their guidance too. Yeah, this thing's bee stings. M up at all? A little bit. Is my little guy up at all? A little bit. Yeah, solid. Into a huge gap. It's interesting. BBBY, okay, close. Yeah, so I love the flow today. Love it. It's not like weekly flow. It's, there's time behind it. For people listening, they're buying January 2023 60 calls. 60. So yeah, I think in the morning I said I like, it could go through 17 today because it's a short float type name. But like a lot of things, it's a day 3 up into it. So I think it's still super bullish. It's annoying that it went and seemed like it was kind of trying to go like these days and then pulled back. I guess 17 and 18 are big levels. So 18 is a big level as well. But it still looks bullish. It could even do this for like another day. Like it could give an inside day tomorrow and then try and go the next day or something like that. I still think it looks good. It totally broke here and then totally saved itself. It's definitely got to hold like 16 now. Looks good. I am long. Bed Bath & Beyond. Is sideways headline market's the worst one? I don't think there's a worst market. It just, it depends what type of trading you like. So if you're like a guy that likes to swing trade and just like hold things, then it's probably a worse market for you. Yeah, because this is not really, not that you can't swing things, but like if you're swinging things, you probably got to be pretty active with them, and it's super selective. But if you're a guy that likes to day trade and only likes intraday volatility stuff, then this is like a great market for you. And that's why you gotta, when you're new at trading, you definitely want to figure out what you're good at and try and master that. But eventually you definitely want to broaden out so you are able to make money no matter what the market is presenting you. I guarantee you there's people out there that made a lot of money throughout this, and ever since like here, they've been having a real hard time. Like swing people that just, buy the dip. So. Am I still scalping? Yeah. Like I did AA today. I like called it out, but I didn't say I was doing it. Cause like these types of trades, like I don't have an out. It could get scary. It could get bad. It's just like I don't know. I don't want anyone to follow me and get hurt because I know I could get hurt myself and doing things like that. So And yeah, like I think I tried. What was I trying? This MU85. A lot of us caught. I forget why I didn't catch this. I was like in the middle of doing something. But like things like this, just buying MU85. But like you're not buying this to try and swing MU. You're just buying it because it's extended on the 5 and the 15-minute chart. And you're just looking for like an intraday bounce. And people caught MU there. People caught AMD here. Yeah, this was this time. Yeah, I can't believe this was at noon. I felt like later in the day. But the market right there, pretty much everything bounced right there. So just like things like that. But some people, like swing people, don't like to buy things and make 50 cents. Because it's different. Like when you're swinging stuff, you're using way less size and going for way more reward. You could be using 50 grand in a swing trade, but in an MU scalp, you could be using 300K, 500K, because you're trying to make, a quick 50 cents. Like the sizing's different. It's like a different type of trade. And some people are more comfortable with certain type of trades than others. Oh, you're talking about these lines. Yeah, it's pivot. It's called pivot lines. I don't know if you can see this up here. Pivot lines. It's a study. Take it with a grain of salt, just like every other study, every other moving average, everything. I take everything with a grain of salt, but they work decent enough for me to pay attention to. Good day, Pat. See if you could give your insight on seat. I forget what this is. Good looking chart, grindy chart. Definitely not like a day trading type thing. Look, there's gaps on the 5-minute chart. What does this do for volume? Not even I mean, it doesn't even do 1 million shares for volume, but it's not terrible. The chart looks good. It's really grindy. If you're already in it, wonderful. 11 definitely should hold, and 1150 could hold. So you could try either, if you're already in it and you're looking for like a stop, or you're looking to add some, you could try and add some versus 1150, or 1150. I say 11 because the 80 May is not quite up to here. But today was like kind of almost a day one, like through this 1150. So you can try and add some or trail your stop versus 1150. This looks good. Looks good. What do I think of MO ultra long term? Long term, I like it. Great dividend name. I think they pay something like a 6.5%, 7% dividend. I think. Which those are exactly the type of names that I am interested in swinging long term right now. This 52 is a gigantic level. Wow, I'm glad you brought this up. This 52 is a gigantic level for MO. And it's been building out extremely well. This is like a picture, it's like a textbook, triangle, bullish triangle, pennant, whatever, breakout. It looks excellent. You could be long it maybe versus these lows. Obviously 50 is pretty big. Or try and see if it can hold 51 going forward, and then 52 is pretty big. I love the idea of being long and long term. It's tobacco, I'm not a fan of tobacco, but I'm a fan of high dividend names and good looking charts. So, yeah, MO looks good. what's the best service for earnings news in real time? I don't know. Any like news service provides it. Omen. Like trade, I always say like trade the news is pretty good. It's pretty expensive, but trade the news is pretty good. Pat, is it better to give your stops more space in these kinds of markets or keep them tight? You kind of have to do either. Like you either have to. It depends on the type of trade, and you definitely obviously should know the type of trade that you're getting yourself into when you're getting into it. Like, don't, tell yourself it's a tight stop type of trade and then, you know, change your mind because you think you're going to be wrong and you don't want to take that $100 loss and change your mind, and then you were annoyed you were going to take that $100 loss, and all of a sudden you're down $500 and you wish you took that $100 loss. Been there way too many times. But like you have to do either. And again, you gotta know what type of trade you're getting into when you're getting into it. But you either have to be very light and give a lot of room, willing to buy more lower or short more higher, or you have to take size with tight stops and the what's the word I'm looking for? The asterisk. I can't think of the word. But the key of with the size and the tight stops that I've really been figuring out for myself is you got to be willing to try it more than once. Like just because something's like extended, if that's the type of trade you're doing, for example, and you buy with a tight stop and you get poked out, you might be able to try it again. If you get poked out and then it goes back up through you buy through, flushes 40, you buy through 40, you're out to 39.90, it chops a little bit for a minute, pokes down to 39.85, you get stopped out and then goes back through 40. Be willing to try through 40 again if that 5-minute EDMA is at 41, and again your risk rewards. If your risk rewards 3, 4, 5 to 1 or better, like you should be able to get paid even if you get stopped once. And I found that with my own trading, where sometimes I'm getting like poked out and taking little losses, and then my trade works, and I'm doing post market analysis on my own trading, and I'm saying, I knew this would have worked. Like, how could I have avoided losing money here, let alone making money that I should have made? And I don't think the right answer is not having a stop. I think the right answer is recognizing I got poked out and then being, willing to try it again. Yeah, that's my answer to that. Yeah, Rich. It's definitely not. There's a difference between revenge trading and thinking you got poked out. And definitely some experience and some tape reading and some like gut instinct comes with that. But yeah, usually if it's at like a big level, usually that can help with your conviction. Like if you're at a real big level, like MU. Let's see what MU did at 85 on an what did it actually do at 85? That's not a great example. That's not a great example. That's not a great example. Okay, here's an example. So TQQ, when everything's bottoming out at noon, right here, TQQ, AMD, MU, whatever, take your pick. We were looking at everything. T triple Q, and I'm pulling up a 1-minute chart because this, it's easy to look at a 5-minute chart at the end of the day and be like, whatever. Oh, buy full BP, MU right here, like duh. It's easy to do that, but in real time, it's definitely different. So say TQQ is coming down to 50, and it's 50 is a big, nice whole number, and it's coming down to 50, and while it's at 50, the 5-minute ADMA is way up here, the 15-minute ADMA is way up here. Like, you're very extended. You're not on your first 15-minute red bar down. You're on your fourth 15-minute red bar down into a big number. So you should have conviction, but that doesn't mean you just buy a bunch at 50 and hold it, because that's not responsible. So say, all right, like, it's gonna come down into 50, and you guys probably know by now, I don't, if this is coming into 50, I don't like to buy 50.01. I like to let it like flush 50 and then buy it back up through 50. So say this flushes 50 right here. You buy it back up through 50. It trades back up right here. This 1 minute bar high is 50.12. So you buy back up through 50. You get your little pop here, and you're thinking, okay, like, this is a great buy, and your stop is the low of the day. Right back here, comes back down. This low is 49.94, so you got like 6 cents of risk or so. This low is 49.94.5, so call it 49.95. It pokes a new low by 1 cent right here, and then rips. So say you get stopped out right here, and then, at the end of the day, you're doing analysis and you're thinking, oh, I should have just not had my stop there. Oh, I should have just randomly gave my stop 5 pennies lower. If I gave it that extra random 5 pennies, it wouldn't have stopped me out. Well, next time you do that, this is going to poke down 5 more pennies, and then 10 more pennies, and then 12 more pennies, and then do this. So I don't think the right plan for something like that is not having an out. I think just, you get poked out, don't throw your hands up and go, darn, whatever. Like, be ready. Like, you're doing battle. You're fighting battle at this 50 level. You're extended into 50 on the 5-minute and the 15-minute chart. It's a big daily level. It's not just going to print 50 and then magically go up. Like, it's going to be a bit of a battle between bulls and bears, buyers and sellers. You got to stay attentive, do battle. It pokes 50, it pokes you out, immediately goes right back up. If you're not complaining and you're ready and you buy it back up through 50, whatever you lost in that 5-minute, 10 cents poke out, I guarantee you made it back in this 60, 70 cent, ended up being $1 rally. It's worth it to lose is it worth it to lose 5 cents, 10 cents, and then lose another 10 cents, equating to a total loss of 20 cents to make $1? Like, yes, it is. It's still 5x. So yeah, that's my thoughts on that, and I've been trying to get better at doing that myself. So yeah. That's my long answer to your question, DJ. What's the future of Oxy and Lucid look like? Is Stefan watching? Should I just draw like a moon up here? I don't know, but this is obviously news influence. 2 huge candles on huge volume. It's more of what I call this like an artificial move. Like Oxy didn't report fantastic earnings or something. They did. Not to say that they didn't. They did, but I don't think that this 2-day move is because of those earnings. That being said, I mean, Oxy's at 47, the daily EDMA is at 42. This is very extended. It's very bullish. The chart is very beautiful. It looks very good, but it's extended and probably needs to cool off for at least a couple days. So Oxy looks great. If you have it, great. Keep holding it. If you don't have it, I would wait a couple days. Lucid reported earnings last night, gap down. 3 really strong days. Totally crushed all those buyers. 25 is a huge level with a ton of history. Excuse me, in this name. So I would probably just watch 25. You could probably be short this name below 25 and long above it. Daily 80 Mays at 26.40, so might chop 25 for a couple days, and then might be able to look for a short on a break at 25. So basically Oxy looks fantastic and Lucid does not look good at all. Gabriel says, I feel like you can sense revenge trading because you force a trade instead of knowing a clear level with a game plan beforehand. Yeah, for sure. For sure. It's not like it's not random buying TQQQ when it's extended on multiple time frames into a big daily level. Yeah, I totally agree with your statement. Yep, Derrick's not going to be happy. I'm taking everything he's taught you guys and throwing it in the garbage. Did we see earnings? I did not look, but I'll post the numbers after this, Brandon. This is a super sloppy name. Carl Icon's involved. 72.50 is a gigantic level. Gigantic. Interesting. I bought M26 added through 26.20. It looked good. My initial out was post or pre-market low to give room, but planned my kick first opening low and would move it up to opening low as soon as I got my 101. Kick at 23.39. My kick didn't fill. I left my original out trying to give it space. Should I split my stops? So one, I would not use this pre-market low in Macy's because there's like literally no volume going on. Something like a SPY or something that reported earnings this morning, like a Target, you can use pre-market levels or pre-market bases. But Macy's didn't really trade anything, so I probably wouldn't have used this. I don't even know what level you were using. I'm guessing maybe 25.50. So just be aware of that. If there's no real volume happening, and by volume I mean like you can see bars of action, not these gaps. So just be aware of that. So with that being said, I probably, just through this 26, this opening bar, and it's not really that extended, so like this ADMA should catch up and catch up to this low pretty soon. Yeah, I probably just would have used that opening low for everything. And if anything, if you wanted to cheat even more, you could have cheated on your 26.20 and just use 25.99 as your out for that. Because if this is going to get momentum, if it's trading 26.30s and it's actually going to get Momo, you shouldn't get a chance to buy it at 26.05, right? So, hope that makes sense, ET. Looks like I got through everything. Any other questions or comments or concerns or complaints? Otherwise, we'll see how we gap. Market's looking bearish. And yeah, we got the Fed meeting coming in March. So, cool. Alright, thanks guys. Have a good night. We'll see you tomorrow morning.